Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. In this video I'm going to be looking at the SP 500, the Nasdaq and the Dow. Also be looking at silver and gold as well too. And I'll also be looking at the bank stocks as well in this video, and probably some other things that may come to my mind while I'm doing this video for you. Guys, this is just a video just to help you be educated around the markets and around your trading as well too. One of the things that is really important to understand when trading these markets, if I say something that my view or my opinion or what the market is telling me right now on the Dow Jones, okay, this is the Dow Jones chart right now, or I may look at the SP 500. Please remember that this is a market of stocks. It's not a stock market, as my good friend and also client who's been a client of mine for quite some time, John would say, is that it's a stock market, it's a market of stocks, not a stock market. So whatever the chart is telling me, whatever this story, because the charts are always telling you a story, okay? And so when we are viewing these charts, we're trying to see, okay, what is the story telling us? And the story comes in the form of a lot of different things. You know, if you grab my $7 trading course, there's a link in the description or maybe in the comment section there, you'll see how to read the charts by looking at the trend analysis, trend line analysis. You know, is it overextended? Like, they're the different things that help you understand what is the story of the market right now. Because that's all we really have to go of. Do you know what I mean? Like, we can never make 100% certainty of what's going to happen, but we can build a massive probability based around what's going on. Now, I'm telling you right now, guys, I watched the Usman and Masvidal fight yesterday, and someone placed $200,000 on that fight. And obviously, Usman won, and that guy lost $200,000. Isn't that crazy? It's like there's so many people out there that would fork out so much money on these bets, all or nothing. I've never understood betting. Okay, I've never understood betting, because betting is like, I'm going to put 100 grand down now, and if it loses, I'm going to lose everything. At least with the market, if I put 100 grand in, I could probably get, you know, if I'm just buying the stock, I could probably get, you know, maybe 70, 80 grand back if it has a big drop, 20% drop. You know, that's a big drop, right? That's the thing I love about the stock market. And then you can start to lay analysis on the markets as well too. So please remember that the analysis that I do on the S&P 500 or the Nasdaq or say the Dow Jones, as I'm looking at these right now, it's just that analysis for that there. If I'm looking at say the Dow Jones has nothing to do with, say, what's going on right now in JPMorgan or say Apple. Makes sense, because if I'm looking at, say, the Dow Jones, the Dow Jones is what? The top 30 stocks. So if I go to the Dow Jones 30, you will see the top 30 stocks within the Dow Jones. The Dow Jones is the average, but there's a lot of stocks within, say, the Dow Jones that are doing really well. Like if I look at Apple here, obviously Apple is a tech stock, but it's one of the largest companies out there. That's the reason why it's in the Dow Jones 30. So if I say that, oh, well, this is what the market is telling me right now on the Dow Jones or the S&P 500, then do not make that view or that bias amongst all stocks across this market. Because the Dow Jones looks like this, and then one of the stocks in the Dow Jones called Apple is continue to be a steaming bull, which is now in a very big massive bubble, and it's gonna be horrendous when this thing starts to drop. And I see this thing, yeah. Anyway, I'll get to that a bit later on. But if I look at the Dow Jones and Apple, look like nothing like each other. But what also happens here? What also happens is if I see that, but then if I look at, say, Boeing looks nothing like Apple, looks nothing like the Dow Jones. So what I'm trying to say is that when you're doing your analysis, only do your analysis on that individual stock and make your decision based on what that one individual stock is telling you.
Please do not say, well, the Dow Jones is bearish right now, so I'm going to have a bearish view amongst all stocks, because that's totally incorrect. Because one, you never know if your bearish view is right, and two, you just never know what's going to happen. You don't know how long things are going to go on for. So the best thing to do there, guys, is not have a biased view on one way or the other. Your view should basically come from what the market is telling you. So I hope that makes sense with you guys. Please, if you want to become part of this trading world, one of the worst mistakes that I've made has been that I'll have such a view on, say, the Dow Jones, that I'll apply that to all these markets, all these stocks out there, and all these stocks are in different types of phases. The Dow Jones might be going sideways for quite some time, but then we see stocks going through big bear markets, big bull markets, all at the exact same time. So that's what I see through there. Also, guys, before I get into the S&P 500 and the Dow Jones, one thing I want to share with you is, isn't it interesting? Isn't this interesting? Donald Trump says, Dr. Fauci is a nice man, but he's made a lot of mistakes. A lot of mistakes. We've made a lot of mistakes. Isn't that interesting? You know, there's a bit of a friction there. Do you think Donald Trump is really starting to catch on to the truth about this whole coronavirus situation? Because he is just like, yeah, like, what do you guys think about this whole situation with this thing here? I really think Donald Trump's just like, you know what, I'm done with this. And so he's no longer talking about it, and he's just moving forward. So it's really interesting to see that Dr. Fauci and all that sort of stuff they're not on speaking terms. So tell you what, guys, on a political topic here, obviously it is a political topic, Donald Trump is really pushing the status quo, isn't he? He really is. He may be booing up the stock market right now, but he really is out there pushing the status quo and fighting the so-called elites out there. So it's really interesting to see. What do you guys think about this situation here? Really interesting. So let's go and have a look at the S&P 500 now and what I see. I'll start with the Dow Jones. And if I start with the Dow Jones, looking at the last 6 months, and what I'm seeing here for the last sort of 6 months through here, if I go to, let's say, the last 3 months, if I just squeeze up a little bit more, if I look at the last, say, 3 to 4 months, what are we seeing through here? We're seeing a massive triangle pattern. So what's coming next? Well, depending on where this breaks out is depending on what's going to happen here. Do we hold and we start to break down from this triangle pattern through here? If so, then we're probably going to see a bit of a move to the downside from there. Just to remember too, guys, on the Dow Jones, is that if we look at the Dow Jones and I bring up my whole, call it the area, this whole from there, that's probably from there. Let's actually just take this off the screen. So the whole area of this weekly chart has indeed been around this level through here, which is around that 27,000 level. Remember, this is the big picture here on the weekly charts. So we have a lot of resistance all through here. If a big drop down, a big move up, and now we're holding through here. So we could be getting ready to have a bit of a drop to the downside, or it could be getting ready to have a move to the upside. Let the market tell us what it wants to do. So if we do break up, remember, we need to get above 27,000 for this to be free and clear. If it doesn't, and we start to have a move below here, so if we have the last 3 months, if we do have a bit of a drop to the downside, then we're probably likely to see, if that happens, we're going to break out of this level through here, and then we're probably likely to see a move down towards the 23,000 level, because now we're breaking out of this triangle pattern. Same sort of thing that's happening with the S&P 500, but the S&P 500 right now is, and that sort of 3,000 level is a bit of a major level too in the past, as you can see. But you can also see that we're squeezing up into like a little bit of a triangle pattern here, and it looks like we're trying to break up and out of this level through here. We do have a little bit of short-term resistance all through here as well too. So that's what's going on right now on the S&P 500. We need to really break above there. And if the market does break above there, and then also the Dow Jones does as well too, then we're probably going to go for a move back to all-time new highs. So as I'm speaking right now, guys, the one thing that's coming to me right now, is that it's like, well, that can't happen or this can't happen. You know, like it's always hard, isn't it, guys? Like one of the hardest things about there is not to have, you know, like we say, oh, you know, everything's really, really bad economy wise, so therefore the stock market can't go up, or, you know, vice versa. I'm seeing so many news articles out there right now saying that you know, there could be a banking crisis and there could be all this sort of stuff again. That's making me believe that we're probably not getting ready for another bit of a crash or another bit of a down move here. Now, please, guys, remember too, as I say the word crash in the markets, this whole crash, look at this here. What happened here? From top to bottom was what? It was over 1 month. It wasn't one day. So a crash takes time. Please don't think in your head that one day we're going to wake up and this is going to be at 2300. It all takes time. You see how the market comes down one day, and then the next day, and the next day, and the next day, and it drops down. And then we have a little bit of an up bar, a little bit up bar, and then it rolls over next day, next day. You see what I'm saying there? Like, things take time, so don't be such a rush to jump into stuff and rush into things, because the market's not going to suddenly open up 20% down. Oh, John, how do you know that? That, you know, it happened in the past. It's probably going to happen again. Guys, there's things called limiters in the markets. So if the market is down, say 7%, limiters kick in and they stop the markets. If they then open it back up, I think it's 15 minutes, maybe half an hour later, and it keeps dropping, then they get to a point where they shut the market down for the whole day. It'd be very, very, very hard for the market to start to see, you know, massive numbers like that. So just please keep that in mind when you're looking at these markets, guys, because one of the worst things that I know a lot of traders would make is the FOMO of fear of missing out, and that comes in the matter of, say, Tesla right now. I know a lot of people right now are buying Tesla, and it is the absolute wrong time to be buying Tesla right now. Absolute wrong time. Why? This is the point of fear of missing out. It has already made a massive move over the last couple of months. This is the worst time to be buying Tesla. Absolute worst time. And the number one mistake if you guys have been trading for a while, you'd know this. The number one mistake would be buying based on fear of missing out. So when the market rips higher, and then selling because of fear. So you buy high, fear of missing out. And then when the market drops, you sell because you're fearful, and then the market rallies again. It's like, that's why the market works. And that's why you can't have a sheep mentality, like a herd mentality. You got to have a system that gets you in, and so on and so forth. So please don't do that there, guys. Looking at now through to the banking stocks, let's have a look at the XLF here, because the banking stocks right now are not looking too good. If I bring up the weekly chart here for a minute, and I squeeze up my weekly chart, you can see what's happening here with the bank stocks. The bank stocks are holding here tight, we're holding here again. We have a bit of a drop down, and then we rally back up, and then we're now rejecting at that 26 level here, and now we're breaking back down again. So it's really interesting to see what is really going on right now within this pullback through here. We're having a bit of a drop down, a very weak pullback. So that tells me, because we did try to break back above this level through here, but we couldn't, and now we're breaking back down. That tells me that the bank stocks could be getting ready to go for a bit of a move to the downside. So I wouldn't be too surprised if we did get a little bit upside, and then we actually start to break down. Once we start to break, say, this $23 level on the XLF, moving on through to here, then there's also that little resistance through there, as you can see. So we're breaking through there. So if we start to break back below this level through here on the XLF, then that's going to give us a sign that we're now breaking up and out of this level. Let me now bring this from here. Let me just make sure this level is proper. So somewhere through there, as you can see. So somewhere through there would be my trend line. Let's actually bring up the last 6 months so we can get a bit closer view. That's that long-term weekly trend line. This is the daily chart resistance line as I've got through here, and you can see how this whole resistance point, resistance, support, support, and a whole bunch of resistance through here as well too. We did try to have a little bit of a breakdown here a couple of days ago, and then we actually solidly break back up. But if we do start to roll back below, looking at the very short-term picture now, guys, I would say that if we start to see a break below this level through here, which would be around about, say, the 2250 level, if we start to break these lows through here on a short term, then we could see, at least on a short-term basis, a drop down towards the sort of the $20 level. But I ultimately think that if we do start to see the break below this 2250 on the XLF, then it's probably a bit of a free and clear move down to 2050, have a bit of a bounce there. But ultimately, I see this thing coming back down to all-time new lows and probably even breaking that low as well too, because there's probably going to be a lot of stops here. So that's what I'm seeing through there. The big picture analysis says we're starting to roll over, and we're getting this now short-term analysis right now as well, saying where we are right now. So that'll be the key. If bank stocks are going to start to take a bit of a hit again, once again, then we're probably going to start to see that first, a bit of a breakdown, and then we're probably going to see a bit of a sell-off in the XLF. Now this is the XLF here, guys. If I look at stocks like JPMorgan, okay, so JPMorgan looks very, very similar to the XLF as well too. So that'll be the trend line I would use for JPMorgan. Once again, same thing for JPMorgan as the XLF as well too. If we have a look at, this is the resistance line through here. We're not really doing much. We're having a bit of a downtrend now for the last sort of couple of months. We had a little bit of an up bar through here. If we do start to break below these low levels through, say, here, so that would be around about, say, the $92 level, then I would say once we start to break this $92 level on the JPMorgan, then we're probably likely to start to see around that sort of $78 level, I would say, would come into play. If I bring up my longer term charts on JPMorgan, and I'm going to go back in time, then we have a couple of different trend lines here. We have this main trend line through here. Let me see if I can bring up my monthly charts here for a minute to see what may come into play. Let's just do that through there to there, and let's do that through there to there. So that one, that's that big long-term trend line that probably will come into play. Let's go back to the daily, weekly chart now. Let's actually squeeze this up. So you can see this is pretty much like X marks the spot. We've got this long-term trend line I just put in there on JPMorgan, and then we have, let's go back to the monthly charts. Yeah, you can see, and on the monthly charts, you can see this level through here has been indeed a major level of resistance in the market. You can see back here in 2000s when I had a rejection point, and then back all through here, which was indeed around about, say, the 2016 levels that had 1, 2, 3 rejection points before we broke through. So I would say if we start to break out and down out of this sort of level that's happening right now on this weekly chart here, if I go back to my daily chart now, and let me just fix this trend line back up again so we can get a nice, good point of reference for us. Let's go back to, say, to the 3-month view. Let's go to the 6-month view so we can get a bit more of a guidance on where we're at here right now. So this is the sort of analysis, guys, you want to do on just any stock you're doing out there. If you're trying to get a bit of a view on, any stock out there, what it's doing, then you can see that this is the simple analysis that I just like to use out there. So this would be the point of line or the point of reference that I would like to use. I can see how that we had a bit of a start here. We had the bounce here, and we also can see we had a little bit of a bounce here as well too. So that's that point of reference of I'm using the market to tell me where the line should be, and instead of where I want it to be. So on the short-term basis there, once again, guys, if we start to break the 92 level, then we can see that we're probably likely to head back down to around about that $70 level there on, say, JPMorgan. And that's what we're looking at through there right now when it comes to JPMorgan through there once again. So but guys, in anything I do say in this video, guys, there is no 100% certainty of something happening. So no matter what, guys, no matter what, the number one rule that I like to follow every time I get into a trade is that I want to have around about a 2.5% risk on my account. So if I have $100,000 trading account, I want to have no more than $2,500 risk on any given one trade. Okay, so for me personally, I like to trade around 5% of my whole account. So if it's a $100,000 trading account, I like to trade $5,000 with options. So if it is a losing trade, say if I did get into JPMorgan, which I wouldn't because it's not a setup for me, but if I did get into a stock or a trade that met my plan and it is a losing trade, a big loss for me would be around about 50%, maybe even more. But the good thing about the trades that I use is that these trades can go to 100% profit, 200% profit, and even recently I had a 1,160% profit, and I was in that trade for about 2 months. And that's the beauty I love about options as well too. So please, guys, no matter what I'm saying on any of these things here, yes, it may work out, but no matter what you do, guys, it's all based on probability. So don't be loading up the house there, trying to make money really, really quickly, because you are going to lose a lot of money in the market. So that's what I'm seeing through there. Let me actually bring up now, let's actually bring up, say, gold. And gold right now, if I bring up the weekly charts in gold, we can see that we're really coming back here around that. That's sort of where we are right now. That's sort of 17, call it the 1800 level, is a major level of resistance back here. So I wouldn't be too surprised to see a bit of a backing pattern right now, a bit of a pullback out of gold, because we've actually just hit this level of resistance and we've been going up for quite some time. So a bit of a pullback in gold, would be, it'd probably be a good thing. So if I go back and look at this short-term view right now on the daily charts, or just looking at the weekly charts, then we can see we had a bit of a pop to the upside on both this, see this resistance level through here. So we had this sort of starting point, resistance point, sort of resistance, and then it broke through. And now you can see how that this level through here, it's actually finding support yesterday and yesterday and the day before as well too. See how the market is actually bouncing off these levels through here? It's bouncing off that level so far on the day basis. So this level through here, remember, this level is back. This is the $1,800 level. That's back on that weekly chart, and where we're having a lot of problems in the past. So if we do start to see something like this and we start to break down like that, then not only are we breaking back below the level of this major resistance on gold, but also we're now breaking back below this. If I squeeze my chart a bit more, this level through here, which is indeed a major support level, which is also this triangle pattern. So we have the major weekly resistance, which is this level through here. And then we have this level through here, which is the resistance on gold, and this level through here, which is the support on gold. So it's squeezing up at the triangle pattern. We broke back up. If we break back down, this is going to be a classic false breakout, and then I could see gold coming back down to at least around that, say, the $1,600 level there. If I look at it a bit more, maybe even a bit more, but on a short-term basis there, guys, I do see if we start to break well below these levels through here, which is around that 1780, maybe 1750 level. Sorry, no, 1780, 1770 level. Then I see a 1770 to down 1670, 1,000 point drop. I see that probably likely to happen when it comes to gold. Now moving on now through to, let's actually bring this up through to here. Moving on now through to silver. Silver right now is having a bit of a move to the upside. One thing I am noticing and one thing I am seeing right now when it comes to silver is that we've had a bit of a triangle pattern and we're breaking out. Now, the interesting thing about silver is silver going to follow along with gold? Is silver going to follow along with gold? I don't know. This could be some form of a false breakout. So here is my two different scenarios to see what's happening with silver right now. If I look at silver, I can see silver has actually broken above this level through here, bit of a squeeze out. And now we're holding through here just like gold, but gold's well high. So silver could indeed, guys, listen to what I'm saying here. Silver could indeed do something like that. That would mean this would be some form of a false breakout, and then we're probably likely to see a bit of a short-term pullback in silver. Now, if silver holds here And the best case scenario for silver for me would be, let's spend another 1 or 2 days doing nothing. And then let's start to see a nice break above this $1,900 level. If that happens, then there's a very high probability we're going to get up to around about the $20 and $50 mark. So guys, I know you guys place trades based on what I say in these videos, but hear what I just said, that there is no guarantees of getting it to 2050. What I would like to see a bit more of a confirmation that as a probability, no certainties, is we're likely to get to that $20, $50 level on that there. But once again, guys, if we do start to see something like this, something like that breaking back below, this here, whole thing here was just one big false breakout, and then it's a move to the downside. So there we go, guys. I hope you enjoyed today's session and today's little sort of market update through there. Guys, just please remember to take care of yourself and look after yourself and make sure that you are doing the right things for yourself, guys. Make sure you head on down to johnsflashsale.com to grab the $7 trading course. If you like the sort of analysis that I do in this video, then that's what I really go through this trading course. And again, guys, it's $7 to help you just get started. You're going to learn the biggest mistakes. You're going to learn, these three. The video number 1 and 2 is more like the foundations. Video number 3, 4, and 5 are more like your chart reading techniques. Video number 6 and 7 are 2 awesome trading systems. Video number 8 is the #1 trading indicator. Video number 9 is about the millionaire mindset management, and video number 10 and the final steps, and so on and so forth. So guys, if you're struggling right now, get into here, start learning all this sort of stuff. Again, it's $7 in there. Make sure you start doing that right now. Go to johnsflashsale.com, grab the $7 trading course, because I don't know when this is going to end. Last time, I only had this $7 trading course up for just a short period of time. So go to johnsflashsale.com right now and grab the $7 trading course, and I look forward to seeing you real soon.